Hello and welcome to another trades and tutorials video. This is Jeff Fish, president of MarketGauge.com, and in this video I want to show you how I was able to identify right in here as being a great point to get long the Qs. And in this volatility, getting long around 150 and from a day trade perspective, be able to sell out 3% higher is one of the beauties of being able to trade in these volatile markets. But it also means that if you're a swing trader and you're looking for the overall market to head higher, you're now in the trade 3% profitable. So before I get into the details of this, if you're just catching us on YouTube, make sure you subscribe to our channel. And also, if you want more videos like this, make sure you go to marketgauge.com/tutorials. And finally, if you don't already know, you can watch this video in HD by changing the setting in the lower right-hand corner. The little setting that looks like a gear, you'll see the option to watch it in HD. It'll be much clearer. Okay, so back to the video. In the last video I put out a day or two ago, I explained the power of looking at the first 30 minutes of the day as an opening range, right? So if you didn't see that video, you're going to want to go back and look at that because I can't repeat the whole thing. But essentially, what we're talking about is looking at the first 30 minutes of the day and defining that as our opening range. If you're below that level, the bears are in control. If you're above that level, the bulls are in control. And of course, you want to look at this in different contexts depending on the whole daily setup. But again, that is a little bit more complex. And I just did a webinar recently that you can find. There'll be a link to it in the text for this if you want to go look at the replay. And part of that webinar focuses on the fact that some of the best trades are not necessarily looking to short below the opening range or buy above the opening range, but instead looking for that transition from markets that are down to markets that are heading up. And that's exactly what happened today. All right, but why today? Why not tomorrow? And the concept of this particular video is not to just look at one index, but in fact to look at all of them. So the best example of this is to look back at yesterday first. So yesterday, the opening, in the Qs, the market looked like it was going to break out and move higher. Now the previous day's high was right there, and that turned out to be resistance, but there was another indication that this breakout really wasn't set to go yet. And that indication is really easy, and it's as simple as this. Rather than just look at the Qs for market direction or just the SPYs, look at the SPYs, the Qs, IWM, and the diamonds, particularly the SPYs, Qs, and IWMs. Diamonds I put less weight on. And what you want to see is that they're all doing the same thing. This is a concept that I talked about in the webinar, and I actually describe it as one of my favorite indicators for market reversals. So the Qs yesterday looked like they wanted to break out, but if you look at the SPYs, they never took out their opening range high. All right, and when the Qs finally were coming back into their opening range, which becomes a negative, the SPYs were already down near the low of the day. Same thing with the diamonds, and same thing with the IWMs. So if they're not all going in the same direction, then you better have a really good reason to be going long, or in this case, that would be a good indication that this is actually a good short against the prior day's high, which it did turn out to be, but you can't always expect that kind of a percentage move. This was heavy selling going into the close. So that brings us to today. What was different about today that you might want to be a buyer? Well, remember I started the video by saying I was a buyer in here. Right, so I'm a buyer in here because if we look at this time frame, right, it's going into lunchtime starting to come over, and the market's now rallying back into the opening range, and it's not just the Qs doing it. IWMs have done it, SPYs have done it, and the Dow has done it. So everything's operating in sync. Now, this today actually gave you a second chance, and that second chance is another pattern to watch out for with the opening range, which is when you come back into the opening range in a significant way, any pullback should really hold that opening range and certainly should hold whatever lows were made in and around the opening range in the morning. So this would have been another area to expect it to hold. So the fact that it came back, held the opening range, and then started heading higher, and did so with all, again, with all four indexes, was the indication that I actually got a second chance today to get in well. Now, in the webinar, I'll go over more specific patterns to know when to buy around here. And if you've watched the webinar, then you'd know the exact pattern to look at right here to be able to get in with that second chance. And if you think about it, the second chance really gave you an opportunity to get in here. You could have even put a really tight stop here and gotten about 4 or 5 to 1 your risk. Now, again, this is either a day trade or it's a great entry for a swing trade if you're looking for a way to start to position on the long side. All right, so that opening range is incredibly powerful. This is just one little slice of how you can use it. So hope you liked the video, and I'll see you next time.